let's put the spotlight on Jana Small Finance Bank. Definitely a good set coming in from the banking pack, and a great reaction on the stock price as well, which is inching high 16% in trade right now. But let's understand more on the internals. Then we are being joined by Ajay Kanwal, who is the MD and CEO of Jana Small Finance Bank. Hi, good afternoon, Mr. Kanwal, and thank you so much for your time. Definitely a good set coming in, but one of the key takeaways is that you're highlighting that the MFI stress has bottomed out. Help us understand a bit more on this one, that going ahead, how good the outlook looks for the MFI segment specifically.
So first, thank you for having me, and going straight into the MFI segment. See, Jana, the bank was launched on March 18. December 24 is 6 and 3/4 of a year. Our compounded growth rate on unsecured microfinance was 1%. So I must answer this with a caveat that we may not be representative of the industry, which has obviously grown at a double-digit pace through these 6 and plus years, right? Now that we have grown slowly, we've been a bit more careful. We have been a lot more individual loans based. Roughly about 55% of my book is individual loans. In individual loan, what happens is rather than lend to a group of women, we take graduates of this group, which means they have paid about one cycle of 18 months or 24 months of loan. They understand credit. We then send an underwriter to their business place, evaluate if they are capable of a slightly bigger loan, cash flow can support it, and then we give the money. So it's a bit more credit-oriented, properly measured loan program, which is why I've been saying since Q2 that we would bottom out in Q2 itself. From what I understand from the stock price, having seen the numbers of credit costs go down, the market did believe that MFI for Jana has bottomed out. It may not bottom out for others depending on their growth rates or what products they are offering. So that was the first very important piece. Having said that, the most important piece for us really is something else, which is, of course, MFI is managed. It's hard work, but we'll do it. Our secured book is 68%. It was 60% in March, becomes 68% now. And like I mentioned on your show earlier also, we would like to see an 80% secured asset book growth. I mean, that strategy and clarity from our side hasn't even shifted for 1 second. If at all, the MFI stress has made that even stronger.
All right. Ajay, also talk to us about the universal banking application. You are already eligible for that, but when can we see that happening?
See, I have one condition to meet to be eligible. The condition put forth is by the regulators is to have a 3% gross NPA and net NPA less than 1% for 2 consecutive years. We met it last year. We are on track till now in the first 9 months to meet it, because both gross NPA and net NPA are below the 2 numbers. We will make full effort to sustain that in the fourth quarter too. Then post audited results. So in the time frame of May or June, we certainly would like to submit our application. As you know, there's a submission of application. The regulator needs to decide after that, after we meet the condition, whether we should get one or not. And that is something that we will see hopefully in Q2, Q3 next year, next financial year.
All right. And also help us with the update and the guidance for the profit figure for the whole year of FY25. Yes, we do understand that it's been a strong quarter this time around, but what numbers are you working with for the full year growth?
Sorry, I missed you, but I'm kind of guessing the question is on asset and liability growth. Is that right?
Yes, absolutely. And the profit growth guidance as well, if you can share that with us.
The last one is a tougher one, but the easier one is asset one, which is we had said 20% asset growth and 20% liability growth. We will meet both of them. We've also guided that we'll continue improving secured. So we began with 60% secured assets on March 24. We are at 68%. We certainly should be at minimum 68 or better as we finish March. The following year also, I would like to do 20% asset and 20% liabilities. But again, with a simple bias that my asset growth has to be secured in nature, which means 68% should be in the 70 plus range. Could be a 72, could be a 74, depending on how we kind of budget when we start preparing for budgets next year. But that's very clear in our minds. On PAT, one very important thing, and we put that in our investor deck, See, post accelerated provisioning of roughly 208 crores. And we have done accelerated provisioning, of course, given the environment, but also to ensure that the net NP remains below 1%. We have roughly declared a PAT of about 360 odd crores. So that gives you a sense of the profit potential of the franchise that one can expect when there is obviously a more normal environment. I would think the trend of Q4 should be the same trend of Q3, which is slightly better than Q3 for sure. We should see some accelerated provisioning so that net NP remains below 1, which is part of the universal bank condition too. And we should have a very good growth in assets, specifically secured assets. So secured assets first 9-month growth is 29%. We'll probably cross the 35% mark when we finish March. Unsecured has grown minus 11%. We are trying our best at minus 11, remains at minus 11 and doesn't get worse. Because we do think that we have bottomed out and now we can see a marginal 1 or 2% increase. That will be our endeavor.
So Ajay, good to believe that in Q4, as the universal banking will be through for the company, and also give us a sense on the write-offs as well, since you're just highlighting that the MFI stress has bottomed out and given like 109 crores write-offs were in the MFI book itself. So should we expect this number to come down in Q4?
It should, but see, listen, this is technical write-off. You typically do technical write-offs to make sure your GNPA and net NPA for fully provided accounts don't reflect that. It doesn't stop us from working hard on collections, because I do think not just Jana, but everybody in the MFI industry will see a lot of recoveries next year, because all of us have provisioned a lot this year. But yes, marginal technical write-offs we do take depending on, is the book fully provisioned or not, because it does help us to get some of the ratios right.
All right, and Ajay, also just for the interest of our viewers, tell us how was the performance in the books in terms of the recovery, and will the disbursals increase in the coming quarters?
So good point. See, credit cost is lower in Q3 versus Q2. We would expect a trend which is similar in Q4 also. So that is a trend of credit cost tapering off and normalizing, and which is why we said the worst is behind us in Q2. So that's one. Two, disbursement will get better, and certainly in MFI, it's where the challenge is, because the person who is collecting is also disbursing. His primary focus is on collections, and once that is not achieved well, then he really doesn't have time for disbursals. Also, his state of mind, when he's finding it difficult to collect, I think the courage from his side to give more loans also is very low. So, and we have seen that in the past crises also, like COVID, that once you're in the collection journey, to let people, and it's a hard job for the collectors, and it's this is all physical collections door to door, and people do get demotivated, unhappy, and the rest. So to then bring them back to a good strong moral ground, saying, listen, yes, happens, it's in our business, we'll have cycles, we'll have every cycle end, then let's get some courage and go back to disbursement. We're in that phase. We're just getting people revved up, back up, saying, listen, yeah, we've been through the worst, let's look ahead and do more disbursals. So I do expect disbursals to pick up, certainly in unsecured, and touch wood, the secured disbursals have been very good. We'll continue to do well.
Ajay, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us on the earnings. And I must tell you that it was quite a positive chat that we had with you. Definitely the earnings fine print was really great, and wishing you all the best, Ajay, for the upcoming quarters.